Hello everyone, my name is Benjamin Boyd. Welcome to my channel. Today I am sharing with you my number one recommended most profitable trading system, especially for brand new traders. This video is targeted toward traders who are just getting started. If you don't quite yet have a handle on technical analysis, maybe you just now learned that the green candle means price is going up or the red candle means that price is going down. This video is for you. Okay, so what we're talking about today is the Ichimoku Trading System. This is a trading platform that will allow brand new traders. Maybe you don't understand technical analysis yet. I want you to understand that in the life of a trader, you are going to continually learn more about technical analysis. There's no trader in the world, no matter how professional or successful that they may be, there's no trader in the world that can stand back and say, I know everything. I've learned everything that there is to know about technical analysis. No, technical analysis, learning more about technical analysis is a lifetime venture. And I realize that can seem very overwhelming to someone who is just starting out. To a brand new trader, that can seem like an insurmountable mountain to overtake. But I want you to know that there is a profitable trading system available to you right now. All you have to do is learn a handful of rules, follow the rules, and you can begin trading profitably as you continue your journey in learning technical analysis and becoming more of a professional trader. So what we're going to talk about today is the Ichimoku system. Now, if you have TradingView, you can go to your indicators and just type in ICHI for Ichi, and that's the Ichimoku Cloud. That's what we want. And this is what the Ichimoku system looks like. This is listed as an indicator in many charting platforms, but it's actually a trading system itself. And there's really four main components that we want to look at. And I know it looks confusing at first if you've never seen this before, but it's actually a very simple and a very, very profitable trading system that everybody should learn. In fact, for me, this is how I learned to trade profitably, was learning how to use the Ichimoku system, because it applies so many different market trading mechanics under one roof. Now, the first thing we're going to look at in the Ichimoku system, the first type of component is the cloud, okay? Now, the cloud, or they call it the Kumo. The cloud is two averages, span A and span B, that are thrust forward in time, all right? And so the first line here, this is the second component, is we have the conversion line. Now the conversion line, it looks like a moving average, and it is a moving average, but it's not taking the average of the close of the candlestick. It's taking the middle average. It's taking the high and the low divided by 2. So it's giving you an average, okay? So this is for a 9-period time. Now the third component is the baseline, the red line. This would be like the slower moving average. The baseline is the slower moving average. It's just the red line here. Now the last component, the lagging span, is probably the most misunderstood part about the system, but arguably it's one of the most important parts. The lagging span is actually just the current price action moved back. So if we take the candles here and we change it to just a graph, to a line, then you can see what I mean here. You see the current price action, and then the lagging span is just repeating the current price action, but it's moving behind us. Okay, so now that you know what all of these lines do and what these activities are, now we need to learn how to trade it. Okay, so there are very simple rules. The first rule is that if price is inside the cloud, we do not take a trade. Remember how I said there's a lot of types of trading mechanics that the Ichimoku system does? If you're familiar with Bollinger Bands, Well, or Bollinger Band squeezes, this is indicative of a squeeze. If price is inside the cloud, that means that we are in a squeeze. Okay, so we don't want to trade inside the cloud. We don't take a trade inside the cloud. The second principle, let's say we want to go long. We want to take a long trade. We want to buy. Then the rules for that are that price needs to be above the cloud. The conversion line, the blue line, needs to be greater than the baseline, which is the red line. And the lagging span needs to be above the cloud. So as an example, if I do a market replay here, then I'll just set it right here. And we see price moving, and we approaching the inside of the cloud. This kind of gives us a good example of what happens during a live trade. Okay, so now, what are our conditions for going long? Price needs to be above the cloud. It is. The conversion line is above the baseline. That's also condition met. But is the lagging span above the cloud? Yes. And we also need the cloud in front to be green as well. So we want a green cloud in the front, price above the cloud, conversion line above the baseline, and the lagging span above the cloud. And let's see if that's going to happen here. Now, right then is where all of our conditions were met. You can see the cloud ahead is turned green, conversion lines above the baseline, price is above the cloud, and the lagging span is above the cloud. And then that's when we would have taken our long entry, okay? So then the question you get is, when do you exit? And there's a lot of different theories and philosophies and opportunities to exit, but what I'm looking for when I want to exit is when price begins to fall back below the conversion line and the baseline. If it breaks that support, we know that price is working against us. Also, when the lagging span begins to move into the price action, that cluster we know works against us. So that's a good opportunity to exit when we see price action, when we see the lagging span moving into price action, and when we see price moving below and breaking through the baseline. That's a good opportunity to exit a trade. Now let's look at how we do a short trade. So it's the same principles, just inverse. So if we want to take a short trade, so to take a short, we need price to be below the cloud. We need the conversion line below the baseline, and we need the lagging span below the cloud. So we see here that we have some warning signs that price is about to change, but we're not ready to take a short yet. We have to wait for all of the components to be met. So we have the cloud in front is red. This is why we don't take a trade in the cloud, because we don't know what's going to happen. But now you can see on that big red candlestick there, that was where we take a short. All of our components were met. The lagging span is below the cloud in front of us is red, the conversion line is below the baseline, price action is below the cloud. That's the perfect short opportunity. Okay? And then people say, well, if I miss that entry, where can I get back in? Well, generally when you break out of a cloud, the first kind of retest higher of the baseline and the bottom of the cloud is a good opportunity to re-enter into a short. You'll see there'll be resistance at the bottom of the cloud and the baseline. You get a pullback. That's a perfect opportunity to re-enter the trade and trade that. And really, as long as the lagging span is below the price, then we're still safe to trade the pullbacks against the conversion line and the bottom of the cloud. All right, it's a very, very profitable system. And what is very awesome about the Ichimoku system more than anything else is it tells us when not to take a trade, and it keeps us from entering into a trade too early so we don't experience a false breakout. The Ichimoku system identifies the trends, it identifies breakouts, and if we'll just follow the rules, we'll be trading profitably. Hey, so I have included a link below to a Ichimoku study guide as well as more advanced videos on the Ichimoku system. Listen, I'm Benjamin Boyd. Thanks for watching.